Hey, Stan.
Oh, hey, I see we're on board now. Okay.
Okay.
Thanks, Joey.
Yep, bye.
Hey everyone. Oh, okay, let's get going here. We'll start the recording. Hey everyone, I hope you can see my screen okay and hear me okay. That would be great. Just checking my own little sound system here. Okay, there we go. I just got to move something off the screen here, but I can see people can hear me okay, and we're all good there, so that's great. There we go. Now we're all set. We've got Alberta, and we've got Margaret. We've got, yeah, Bart says perfect sound. Raphael, good morning from Calgary. This is Stan Heller broadcasting from Lethbridge, Alberta, and great to have you all with us. Yeah, beautiful sunny day here in Lethbridge. I hope it's all good for you as well. Les, good morning as well. And Michael says we can hear very well, so that's great. Ryan, good to have you with us. So I think it's going to be a very good day. So without further ado, I'm going to get started. I've clicked the record buttons everywhere that I can think of, so we will have a recording, and the slides will come out on Monday. So just so you know, you don't have to email me unless you've never received the recording and slides after the forum from VectorVest or me. You will get them automatically as a subscriber. If you're not a subscriber, you'll want to email me at stan.heller@vectorvest.ca. I'll chat that in as we go along. So just a quick risk disclaimer. There is risk in investing, and certainly everything you will hear and see today is provided for educational purposes only. We're teaching you about the VectorVest program and how to use the tools that we have available for you. And the information is designed to empower you to make your own decisions. So our agenda for today, we're going to do the VectorVest Around the World Color Guard report, and I'll cover that. And we'll bring Dr. David Paul right in to talk about the US and UK markets and also give us his ideas about the markets going forward and how to manage your portfolios. And then once David is completed his presentation, I'll come back and give you a bit of a playbook for an uncertain market. Just some tips and wisdom from Dr. Toledo and other VectorVest instructors, and a way to kind of manage your portfolio going forward as well. And just again, the replay will be available on YouTube immediately after the webinar. Same location as you got here. You can get there from the VectorVest views in Friday in any of our countries. And then the slides will be sent out to you Monday afternoon. Sonny says no sound, so somebody can help him out a little bit. There is a little bit of a settings button right under the bottom of the slide that you'll see, and you can set your quality of video and sound as well. So make sure the sound is checked and that you've got good sound. That would be really great. Everybody can hear me okay, so if you're not getting sound, there's not much I can do. I can't see your screen, but I do know you might have to click on the volume button right on the screen or the settings button to improve the quality. Okay. All right, so let's move forward. I want to go over the color guard reports here from VectorVest in our different countries. You can see that Canada year to date, we're down 3.80%. And currently, though, we're starting to see some green in the color guard. Notice we did move higher week over week for 2 consecutive weeks. And we did get the confirmed up call, and that was March 29th. I've got my laser pointing to it here. I don't know if you can see it there very well, but over here at the top left, that's where we had our confirmed up call. So we're in a confirmed up call. The buy sell ratio has gone from 0.29 2 weeks ago to 0.66. So we're moving up, and the MTI is moving up as well. The MTI needed in Canada to get above 1.02 to get that confirmed up call, and we got it on March 29th. So in the US side of things, quite a nice improvement from when we met last month on March 4th, and they're still down the overall market 7.2%. So it's been a bit of a tough go. You'll notice that the buy-sell ratio crossed above 1 also on March 29th, and that triggered the confirmed up call using the rules for the US market. And from there at 1.43, the buy-sell ratio has fallen yet again to 0.84. So, caution is advised. We're mildly bullish. And in Australia, down 5.76% year to date. Some green showing up in the color guard. Did not achieve the requirements for a confirmed up call, but notice the primary wave has been up, several days out of the 13 days that are showing here in the color guard. So things are looking up there, but still a ways away from the confirmed up call if that's what you're waiting for in Australia. But you might be coming in on either the green light buyer when we get a green light in the price column, sort of step in and take advantage of opportunities as they may be there. Just be a little bit cautious, maybe have your tighter stops in place if you decide to come in early. The other 4 countries are all in a confirmed up call, which is our most conservative market timing signal. UK 6.08% year to date, so to the negative side, but a big improvement from last month when we met. You can see over here at the bottom right, the UK had been down 12.02% year to date to March 4th when we met, and gained 5.94 over the last month. So looking better, and Europe looking better as well. You can see that at the bottom right here. So every one of our countries made some gains over the last month, and that's encouraging, but we don't want to get too enthusiastic and sort of forget about all the rules. We want to keep the rules in place. Okay. Irwin is asking, is this a dead cat bounce within a bear market? I think we need to wait and see when we get into the market timing graphs. I think you'll see there is resistance overhead. So, we need to break through some resistance yet. Great question. Thank you, Irwin. Great to see you. All right, so I'm going to move on. I want to say that volatility and uncertainty continues daily and intraday, and risk management, I would say, should still be your top priority. There are definitely opportunities out there, and I'm going to talk quite a bit about that when I come back, and how to take advantage of those opportunities in a safe way. But for now, we do believe risk management should be your top priority. Just type in a 5 if you strongly agree about risk management, even in the countries where we have a confirmed up call, and just type in a 1 if you disagree, and somewhere in between if you're kind of more bullish on the market than bearish. just type in what you see out there. I see Chris, Tom, lots of fives coming in. Lots of fives coming in. Margaret's a five. Tom is a five. So mostly fives coming in. I see a 4, 3, Heidi. So there are some opportunities out there, and we need to follow the color guards. We've got a confirmed up call, and I know for Canada, I always tell our subscribers, once you get a confirmed up call, you should be, getting close to being fully invested with your cash reserves still available. But we want to be fully invested and follow the signals that VectorVest is giving us. But just remember to have rules. Lots of fives coming in, so that's awesome. That is awesome. All right, well, listen, let's look at Canada. I always recommend you read the strategy section in the views. And on yesterday, the views said, despite concerns surrounding Russia and the Ukraine, rising energy and healthcare shares sent the price of the VectorVest composite higher. So there's that energy, petroleum, still driving our Canadian market quite strongly. And we received the moving average above the price above its 65-day moving average, and the MTI moved above 1, and so we were in a confirmed up call. So that's what happened there. But nevertheless, VectorVest says, as uncertainties continue to dominate the market, keep an eye on the color guard in the coming week for further direction, and prudent investors may buy stocks long. So here's that graph that kind of shows we're right at the 65-day moving average, and it could be a bear cat bounce or a dead cat bounce, a bear flag. We'll have to wait and see where it goes from here. The 65-day moving average is still trending lower, so we need to be a bit cautious. There's our green triangle for the confirmed up call. But just know in Canada, when we get a confirmed up call, they do tend to give us a good opportunity to make money. Here's one back here at the left, and we had a good chance to make money, and the confirmed down call is there to help us protect our portfolios. Okay. Notice over here at the right, I just took a snapshot from the Derby, and on 315 we got that sort of a bottom here. You can see it if you can see my mouse here. We kind of got a bottom. The buy-sell ratio and the MTI were very low, and so we got a bit of a bottom. So I did a buy and hold on all the searches that the Derby tracks. Timson's taggers came out on top, and sure enough, I think 9 of the 10 stocks are petroleum plays. But look at those gains in just a couple of weeks. So we do need to be alert to opportunities for sure. And I think industry groups and sectors is a great way to manage your portfolios going forward. And I'm going to really hammer that home later today. So there's the top industry groups, chemical, fertilizers. So this is right from the industry viewer. Very easy to find these. And I'm just going to go quickly to Canada. Just go to the viewers tab. And there's the industry viewer. Get this right up to date here, I guess. Just have to move the mouse a little bit. So there's our top industries. We have 40 sectors, or 39 in Canada, and there's our top sectors. Okay. So I'm going to touch on that pretty strongly. Yeah, Richard is asking, did I buy on 315? And I did a couple of calls, Richard, and also added a couple of positions as well. Marty, if I don't know how to tell you this, but if somebody could chat in, if you don't have sound, go to the bottom of the screen where the slides are and make sure that volume bar is turned up all the way. And you can also go to the settings wheel and adjust the quality there. Everybody's getting sound, so please help Marty out. Okay. All right. So things are looking good there. There's the sector viewer. On the US side, and David will go into this much more thoroughly, but as inflation concerns linger, we still managed to gain on the price of the VectorVest composite, and the buy-sell ratio closed above 1 Tuesday. It's below 1 now, but on Tuesday it was above 1, and we received the confirmed up call signal. And just as we saw in Canada, a little bit of caution, uncertainty still reigns supreme with earnings season on the horizon. So let's take it one day at a time. Stay tuned to the enhanced daily color guard and stay informed in the week ahead. And the suggestion here, the guidance is prudent investors may buy high VST buy-rated stocks long when the market is moving higher. So we're in this little bit of a channel. We're right up against resistance. So it could be that bear flag again that Irwin was speaking about or asking about. I think we need to see, but it could also be a bull flag and at the right here, and we could move up from there. All right. And for the analysis mode here again, buy and hold from this bottom right in here, just to, I think just over 2 weeks, 13 trading days from the bottom fishing in rising industries. So there's those rising industries again. Picking good stocks and industry groups that are rising is one way to manage risk in this market, and some really strong performances here. Yeah, Paul, that's a great question. Any significance to the outsized moves in the buy-sell ratio in the U.S.? I'm gonna make a note of that one for David if he doesn't cover that. But definitely we're seeing that. You know, that certainly there's sort of a concentrated group of stocks and industries that are really driving the market, and so the buy-sell ratio almost seems out of sync with the MTI at times, the market timing indicator. All right, and these are the top 10 industry groups currently in the US market. So petroleum still up there, steel, chemical, fertilizers, aerospace and defense starting to move up, utility starting to move up. So that's what we're seeing. And there's our market timing graph for the US side. So actually that's the Canadian. Okay, there's our market timing for the Canadian. All right, there's our market timing for the US. A little bit of a bottom here, but resistance overhead. All right. Oops. I always like to look at the emotional market cycle, and so it's kind of interesting. We met on February 4th. Buy-sell ratio was 0.30, MTI is 0.73. Over that month, the MTI didn't really move in Canada, 0.72, and buy-sell ratio at 0.37. And then in the month of March, the buy-sell ratio and the MTI certainly picked up, and we saw that with the returns as well. Yeah, bouncing up against resistance line is what I saw as well. All right, and then here on the US side, we can see the MTI was at 0.60 on February 4th, 0.27 on the buy-sell ratio. They improved in the month of February to 0.64 on the MTI and 0.33 on the buy-sell ratio over here at the right, and currently 1.07 on the MTI, and the buy-sell ratio has fallen below 1.84 now. So here's a question for you. If we were looking at Friday and we were still in a confirmed down call, would we have moved to a confirmed up call on Friday? Anybody have the answer for that? Would we have moved to a confirmed up call on Friday in the US market? There's what it looked like. Oh, lots of no's coming in. We would not have gotten a confirmed up call on Friday. And the reason is the buy-sell ratio. You can see it here. Maybe I'll make it a little bit larger. Whoops, there we go. Buy-sell ratio had fallen below 1 It had reached 1.43 on the up day when we got the confirmed up call, and it's fallen to 0.84. All right, great. Everybody's paying attention. That's awesome. So we're right here in the blast off phase and the optimism, the trading or trending phase up ahead. So there is optimism, and we should follow the color guard as it says in the strategy section. Just before I turn it over to David, just a quick reminder, we do have some webinars coming up about the Mastering Moving Averages course. We're also going to teach, Jerry's going to teach a little bit about the EMA Squeeze, and I'm going to just take that a little step further in my presentations on these days to talk about the Guppy EMA Squeeze. So some good learnings, and we'll tell you about the Mastering Moving Average course that's coming up again, so you can register right from the views. And there's the 10 lessons in the Mastering Moving Average class, and the early bird price is $295 US, so that's kind of where we're at with that. Love to have you there if you are so inclined. All right, so next I'm going to bring in David to talk about the US and the UK markets in particular, but also just talk generally about the market overall. So David, I will switch things over to you if I remember how to do that. My goodness. Got to get over here to the list. There we go. And I'm going to make you the presenter, David. And bring your screen over to this monitor. And we'll see if you're tuned in for sound. There we go. Oh, hey, excellent. Your sound is excellent. You're all set to go. Thank you, David. Oh, David, if you can hold on for a quick second, it seems like some people everybody's not getting the sound, so I just need to do a quick adjustment here, I think. Sorry about that. No matter how many times we check this out. Okay, there we go. All right, do you mind trying it again? Check, check, check.
Yeah.
There you go. You're all good. You're all good now. Everybody can hear David okay? All right.
Can I proceed, Stan? Yeah?
Yep. Well, I'm waiting for someone to say in the chat box they can hear you. Check, check, check. Can you give me a check, check again, David?
Yes, I'm here, Stan.
Oh, there we go. You're all good. Yay. All right. Thank you. Sorry, folks. A little glitch there, but
No
David
worries.
is all set.
No worries, folks. I just went through the UK disclaimer, and that pretty much says that I can talk about the shares that I hold myself, but I have to make it very clear that although they're suitable for me, they may not be suitable for you. So that said, we can go straight into the US market, maybe rehash a little bit of the ground that Stan's been over. But as you can see, finally, we got it confirmed up after trading on March the 29th. That was, I think, Tuesday. And the MTI is above 1, so the underlying trend has been up for a while. but the buy-sell ratio just stuck its nose above 1. Now, that young man a few minutes ago said that he'd spotted non-linearity on the buy-sell ratio, and that frequently happens. There was certainly a big day where the market pushed out of a resistance area that caused that. So the buy-sell ratio can be non-linear. It tends to go in jumps. So we've got a confirmed up in the US and an up situation. We've got a green light in the price column. We've got a little black star in the green light telling us that momentum is moving up. VectorVest advocates buying safe undervalued stocks that are rising in price at this time. But before we can make any conclusions, we need to look at the trends themselves. That's just a summary of what Stan has put up already. Buy-sell ratio has retreated, although up a little bit on Friday. So that's what the confirmed calls over the last year. Not an easy bit of confirmed call trading here, but that's certainly a signal of note that occurred in the last week of November that kept us out of all of this angst that we've had during the course of the year. Although this pushed up and pushed up quite considerably, the buy-sell ratio can get absolutely nowhere near its 1. So the underlying trend and the confirmed call remained down. That was a really great signal. There's the confirmed call up. The buy-sell ratio stuck its nose up and has pulled back again, but the confirmed call is still in place. The count is interesting. That's the 6 months on this, and I'm going to count when we get to the S&P in a second. But folks, I've got some positions. I had 2 good trades. I'll show you them in a second. I got stopped out of them during the course of the week. I have another few running, but I haven't participated in this run in the US probably as much as I should have. That's the DEW. DEW gave a very good signal out of a mega oversold situation. The market's still well above the 30-day moving average that defines the signal. The momentum is still looking good here. So that signal looks good. And that's the S&P 500. As you can see, it's camped at a very, very important level. We've got this level running through. We've got support, resistance. There was one S&P point between those 2 levels. And now it's gone up there, and I would have expected that market to have fallen from there, and it did fall from there. And that's what known in the language of Wyckoff technicians, of which I'm one, as an upthrust, a pretty textbook upthrust as well. Is it over? Well, we shall see. So I'm going to get my hat on. I'm going to say that this is my preferred count. And I told this to the UK people last Monday. That's 1, and that's wave 2. And this is 1, 2, 3, 4, and 5. We're now in 5, wave 5 of wave 3. And I think we're going to come back a little bit further. I don't know. I wouldn't be at all surprised to see a bit more of a pullback and then a final push up. That's my ideal situation, and then we'll see what's going to happen. However, the very fact that we had 5 waves up here makes me feel reasonably bullish about what's going on. So to answer that young man who asked, is this a rally in a bear market, or have we got a new move to new highs? The situation that occurred last week, which I was hoping for when I did the UK Q&A last Monday afternoon, has in fact transpired. This push through this high. Now, that non-linearity that the other young man mentioned in the buy-sell ratio, clearly when the market pushed through this high, folks, it pulled an awful lot of trend followers, and there's a heap of guys who would do nothing. They would say, okay, we've broken this resistance. That's a 65-day high or some nonsense, and it sucked them in and unfortunately spat them out again. They had been sort of sexually violated there. This is what I think. I think we've got more noise. I wouldn't be at all surprised to see a pullback. A pullback in a wave 3 is normally this would now be wave 4, the bigger wave, and that would be wave 5 up here. And wave 4 is normally a 38% retracement of wave 3. So maybe a bit more pain here, I'm not sure, but then an eventual wave 5 up. I could be completely wrong in this, but that 5 wave up makes me reasonably optimistic. And I think that we can quite easily have a very, very nice run into April and May. Well, we're in April already, April, May, June of that order. But I'm always maybe overly optimistic, those of you that know me, okay? We must, by this stage, you should have formulated a set of rules, folks. And just remember that if you follow your set of rules and the market doesn't play ball, well, that's not your fault, okay? That's not a mistake. What would be a mistake is that you spend months and months and years formulating a set of rules, and then when you're supposed to act, you don't. That would be a mistake. So when it's time to buy, you won't want to. That's a universal truism of this business. So I've been building positions in this now. This is the SPY, which is the tracker of the S&P 500. And for some reason, I find the volume figures on this much, much, much easier to make sense of. I think there's less arbitrage going on, less pairs trading going on in this than there is in the actual physical cash index. But one thing we see here is that we can see that this bottom was made, folks, on emphatic volume. Look at that's the biggest volume in many years, right at that low. That was on the 21st of January. Then we come back down again. Again, we make this low, this huge reversal ball. It took one gap down and moved up, and that's, I don't know, there's a candle pattern for that I've forgotten. It's called a piercing line, I think. It was called a gap and snap forever. And then we pulled back, and we started to move up here on good volume. And then there's that of wave 5. This is 1, 2, 3, 4, and 5. And I think that's 5 of 3. We pulled back here on rising volume, and I was short of that from on the S&P itself. I was short of that, held it, went short, I think, on Thursday. A bad trade on Wednesday. I got stopped out for 20 points on Wednesday because I shorted it, that went back up again. And then on Thursday, I took a trade and held it till last night on the 1-hour chart. Because I was looking for any reason to short it up there based on that up thrust. This market, especially in the last little bit, was rising on average to low volume for this market, just eyeball what. There's only 3 types of volume, low, average, and high. And that I felt was in fact relatively low volume, and it was going to come to an end up there. So I'm reasonably optimistic that we can go higher. Now, I'm not saying we're going to keep going for months on end, but I think I'm reasonably optimistic that we're going to get another leg up after probably a little bit more pain. So I've only got 3 positions running. They're reasonable positions for me. I was stopped out on CF, folks, on that pullback. Did really well there, and I took a bit off, well, half off. I got my stop to entry, and that little sword took me out. I think, folks, you see how this rose on lowish volume, and that was saying something. I don't know what the fundamental was there, but that was certainly a worry, and that's a divergence, and there's a special term for that in Wyckoff area. But there was also a little bit of heads up here in that in this period, the market fell in rising volume. It really shouldn't do that if this was a bull market. But this candle, folks, this looks like a flush out to me because you see how the candle opened, went right down, and then reversed, and it happened on big volume. It's color-coded red because the close was lower than yesterday's lows, but that was a very positive bar on big volume. So that looks quite good. And I think that you see that we've got one of these fellas here, and we've got something here. And I would be tempted to go back into that if we see a close above that level. The VectorVest valuation's up at 126. So that either could easily be a flush out. It flushed me out anyway. CCJ, I'm very happy with. It's a uranium stock. And as you can see, rising and rising volume, rising and rising volume, rising and rising volume, pulling back and lower volume, and just needs to get through this high at $30. I think that that's going to happen relatively quickly. I'm very bullish about CCJ. And that's Archer Daniels. Again, I've got made really good money on this and got stopped out on that flush out. As you can see, a big volume bar, but it couldn't close on its lows. So there was certainly demand at these lows, as you can see, that and that. So I'll be looking at that again. VectorVest valuation is 86. It's starting to look a little bit fully valued and clearly in food and in soft. So that was quite good. If you're a long-term player in it, I didn't see any reason to get out of it all, but I spread bet it with leverage. And MATX, I'm in, sweating a bit, but I am in. And clearly that pullback on rising volume is not that good, so sweating in that one. In the UK, well, we've had a confirmed up in place for longer than the US. That's the situation here. We had the buy-sell ratio was printed a red light, means it's down day over day and week over week. The red has slipped after a really, really great run. We're still in an up situation with the MTI at a fairly respectable level and a confirmed up situation. So the advice is to sit on your hands at the moment. That's what's happened. Those are the confirmed calls. We had a really good run in the UK, and then the market, in fact, to use another Wyckoff expression, fell through the ice somewhere around here, and has come back and came back strongly, as we all well know. From that confirmed up, I've started to buy in again, and that's just a blow up of the same thing. When the MTI is above 1 and the market's moved up for 2 5-day periods in a row, it prints a signal. This is this little range that it was in, and it's now come back to test that range. Folks, pretty much everything is tested. Markets break and they test. Infuriating at times, but that's just the way it is. Like crocodiles snapping at you and planes running late on a Friday. That's just the way it is. So, that's the DEW, which is up as well, and like the US, that looks as if it's a long way above its moving average. The momentum looks good, so it's time to be strong. FTSE, in fact, broke my 78% retracement. The FTSE's had the FTSE 100, top 100 mining company, top 100 companies, very commodity weighted, very oil weighted, and that's why underperformed the US markets by a mile over the last 6 or 7 years. So that's had at the time of its life, to quote the song. So I've bought in, folks. I bought into Cape, and we'll go through these in great detail on Monday afternoon, UK people. Bloomsbury, Anglo's going well, CCC is going well. Bought a little bit of Morgan Stanley. AAF seems to be holding its own after Singapore sold out. McFarland, good position in that. Sylvania Platinum's doing bugger all, and Pan-African is going very strongly indeed. So if we look at Anglo-American, it's a standard trade for me. The pullback to an old high, and there was a flag here. And that's just such a good trade. So you want to see a trend, you want to see a pullback in the trend and a breakout in the trend. And it's showing reverse divergence as well. The breakout traders will be sort of sitting watching somewhere up around here, and that's up about 10%. This is Cape. Well, Cape Tech, I bought into a starter position just at that high, and we'll see how it goes. This is something we have to watch because we had a huge volume bar and it couldn't make much inroads, so that has to be watched. A break above that inside bar and I'll buy some more of that. Like Cape. Morgan's Sindel, I bought into Morgan Sindel, that's looking good. And that's that Airtel Africa, that's that Singapore fund that seems to be holding its own after that. They sold 1.5% of the company. And Bloomsbury, very happy with Bloomsbury. Bought into it largely, both fundamentally and technically, but I felt that there was huge accumulation going on here. And as you can see, in these up weeks, big volume went into it last week, reported really, really good results. And it went to 450 at one stage. Clearly, there was a bit of supply, quite a bit of supply come in at 450 because well, anybody that bought down here was taking a third profit, so you couldn't expect the short-term players not to do that. I think that looks good for further gains. So when the UK market, the colour guard, in fact, tells us that it's safe to buy again, i.e. the old pointer moves into the green, then I shall be doing my best to stand still to get fully invested. Very difficult to beat the market. Not impossible if you're not fully invested when the general market is rising. So it's time to be brave. As I said earlier, folks, if the market goes against us, it's not a mistake. If your rules say that you should be buying when VectorVest gives a buy signal, i.e. a DEW or a confirm call, whichever one you choose in your trading plan, and you don't buy, well, that's a mistake because you haven't followed your rules. So, gold. Well, impulse, corrective wave. What happens after a correction? The trend, in fact, reestablishes itself. I felt, maybe wrongly, that we were going to actually test this level, but at the moment we're making a really good job at testing that high, because as you can see, we've come off that and we made what candlestick people refer to as tweezer bottoms there. I've been short of it twice during the week. Got that bit, and I got a little bit in there as well. I shorted it again. Both those were a Wyckoff up thrusts on the 4-hour chart. I still, I'm not convinced that we're not going to see a C leg down to there before this goes. So I remain very, very bullish on gold, but there could be a bit more pain down to about 1840. Maybe this level will hold. But there was certainly a lot of buying at that big round number, that 1900 level. The 1900 level goes, then expect a test of at least 1850. That's Pan-African Resources. Had a good week, that's for sure. But at this, sorry, that's GDX. What am I talking about? Not Pan-African Resources somewhere. There's the GDX. As you can see, I bought into it here. That's called a spring, a Wyckoff spring, and it has faffed about. Now that's the first attempt. That's the second attempt. That's the third attempt, and I think we're just about to break on this. So the GDX is saying that that bottom is going to hold. So, it's gone sideways on falling volume, and as you can see, the ranges between the high and the low are really shrunk in here. So that's what many people call a volatility, a VCP, a volatility contraction pattern on falling volume. A breakout of this is worth a go. And as you can see, it's on the VectorVest buy signal, but I'm holding that position from about here. Let's see what happens. This is Gold Fields. Now, this is a classic Wyckoff spring. I'm not in here yet. I know the share very well. As you can see, this has risen. And you can see volume going up. Okay, that's good. And now it goes sideways. Now, if you were to work out the average true range on the way up and confirm it to the average true range in here, you'll see that volatility is contracting in here and volume is falling. That's a volatility contraction pattern. Resistance, support, goes up, can't break, comes back, runs those stops, is just about to reverse again. So that's a textbook spring pattern. Folks, if you just want something simple, in the stock market, you're looking for about a 30% move. And that 30% move should take six weeks to 3 months. And then the little bugger should go sideways. That should be in big volume. This should be in lesser volume. And then it should break. Okay. And you want to try and get in at the break with a tight stop. Let it run. Now, invariably, when it breaks, it's going to run for 3 to 5 days. So after 3 to 5 days, get your stop to entry, let the other half run. Take off half, let the other half run. That's a universal plan. And I taught that to my son in South Africa so many years ago, and he manages a hedge fund just on that. So his criteria are, 1, stock must have moved up by 30%, and it should have moved up within 6 weeks to 3 months. He then waits for it to go sideways on lower volume. At that stage, Stan, the moving averages should have caught up. Sometimes the moving averages are still down as it's running up here. So he uses my 21, 55, and 89. And as long as they're still positive, and you can see that's the 21 here. So the 55 would be there, the 89 would be down there. So that's a universal prescription for making money in markets. Of course, we want the share to be undervalued. Of course, we want the share to be showing rising EPS. Of course, we want the share to be in a good sector. And we want the dreaded stock market to actually printing a confirmed call. So line them all up the way that I spoke about in the 2-day seminar, which you should all have in your VectorVest University. So that's a very simple prescription. I taught it to my son years ago, and maybe I should practice it more often. This is platinum, and platinum is struggling. Eli in North London, don't slit your wrists, mate. That SLP will be fine. We have a customer in North London who's loaded up on a platinum mine, this platinum mine, and it's not going anywhere. And unfortunately, if that platinum breaks, I don't think it will, but there is a possibility that it can get down here to scare the cats before it goes again. Invariably, most moves will, in fact, do their best to get rid of everybody before the big move happens. So that's unfortunately something to sit and wait on. This is an impulsive wave. This is definitely corrective. I would expect that to move. This company is just printing cash at these particular levels. That's copper, folks. Doing its best to get through those highs. I thought we were off to the races a month ago, but it didn't happen. But that's my biggest position. I'm very happy with it. As you can see, this is rising on rising volume. Now it's going sideways. If you blew that up, folks, that's on a daily chart. That's starting to trade a little triangle in there. Break of that, and away we go. I think we're going to go an awful lot higher in BlackRock Gold Mining. It's got half a dozen of the usual suspects in there. That's Italia Mining. I'll have to do research for Monday afternoon. Is this tail real, or as you can see, I only saw this morning. I'm not holding this. It went open. I know a lot of our customers went down and ran all those lows, and now it's reversed. And it did that in big volume. If that's the case, that's huge accumulation, and huge accumulation by very bright people, because they've nailed an awful lot of people. So if you're nailed in it, not so good. But if you're now getting in, you'll be getting in after most people have been eliminated. That's always good. But I need to do some research in that. I actually only saw that this morning when I was putting together the presentation. I shall try and do that before Monday afternoon. Jubilee, I would wait. Maybe if it breaks down here, which I would suspect, then that would be a classic spring. And of course, you can chase it if it closes up around there. And value players will just go out and buy it, because I think that this share is going to. This is definitely impulsive. This is definitely corrective. Just a matter of time before that breaks. And they've got a tremendous copper resource in Zambia. That's oil, folks. I've been short of oil. I think that there's another leg down in this technically, down to about that level at least. It won't make much difference to the big players who are printing cash up around these levels. But I suspect we're going to see another leg down, 3 back. Then it will be a really good buy. It can stop here, but I've been short of that on spread bets. And that's Shell, folks. Even with the oil price coming back a little bit, at these levels, they're printing loot, and it's been very solid up here for the last couple of weeks at £21. That's one of my best positions, because if you remember, everybody, we bought into it somewhere around here. But we have a young man who's been sitting in Serica since here. Paul, if you're listening, and has in fact printed a heap of loot in this period, and Serica has moved above £4. There's been lots and lots and lots of wonderful stories in oil stocks all around the world from VectorVest customers. So folks, I don't know the future. Nobody knows what's going to happen next. I don't stand. It doesn't. Certainly that idiot who jumps up and down on the TV every afternoon doesn't. But all we can have is a simple set of rules and resolve to try and put those rules into practice. What is a mistake is that if you spend months and years putting together a set of rules, as most of us have, especially the quantitative people, you actually chicken out and don't put those rules into place. Remember, you should be risking 1% of your loot in any one position, and should size your positions properly, so if the whole thing falls apart. And Stan, I believe, has got I know has got a little Excel spreadsheet that his son very kindly designed so that you can do that automatically. And you need to accept the risk. Very many of us would like to think that we're risk takers, but we're not. We haven't accepted the risk. So when the share falls from 10 to 9, we should accept the £1 risk, but in fact we don't. And it falls to 8 and falls to 7, and then in a drunken moment you say to yourself, let's buy a few more. So the real mistake is having a simple set of rules that most of us have, but the real mistake's not following those rules. So I'm waiting in the UK, where most of my money is, my account is. I'll be waiting for the colour guard. If the colour guard goes positive again, then I, in fact, will be doing my best to try and get to about 70–75% invested in this wave up, and keep that running. I wouldn't be at all surprised to see a little bit more pain, and then a nice big run up into April, May, and then we'll probably flat line during the course of the summer. Stan, that's me all out of air.
Hey, David, that was awesome. Very, very good. Thank you so much.
Be kind, Stan.
Thank you so much. Yeah, so a couple of comments, more comments than questions. You covered things so well, folks. If you like this kind of presentation and David's expertise, please click that or smash that like button. We'll build that likes up because it was pretty fantastic. We just had a lesson in how to use stops as part of your risk management. And Irwin says Dr. Paul has very strong focus on the strongest industry groups in the market. So that was pretty cool. And I'm going to talk more about that as well. So just an excellent job, David. We really appreciate it. I'm just looking to see if there's any last minute here questions before I let you go. Just comments are a great presentation. Excellent as usual. Yeah, really awesome. Okay, so I think I'll let you go, David. I know you've got some other engagements, but pretty awesome.
Yeah. If anybody wants a bit more detail, it's 1:30 on Monday afternoon UK time. I think that's 8:30 Eastern American time, 5 hours difference. So yeah, 8:30 in the morning. If you want some more detail, and the recording will be available in the UK, late UK afternoon. Okay.
Yeah, that's awesome. Subscribers can just go to VectorVest UK and register for the for your Q&A webinar Monday morning, and as soon as they register, they'll get a copy of the recording as well. So definitely a way to go. All right. Well, David, I'm going to take the controls back here.
Sure.
If I can,
sure.
I'll make the presenter. Okay, there we go. And I think we're all good. And folks, you can still hear me okay? We're all good? Maybe you could just chat in. I don't know if Joey can see this VA teller land, but would sure be nice if I could boot him out. You're putting in all kinds of graphics. I don't know how that works. Yep, everything's good. Thank you, Barry. Paul, Andrea, thank you. Rajan says sound is good. All right, well, that's awesome. Well, listen, I want to just talk about a playbook for an uncertain market. I really think this is an uncertain market. In a way, it's been kind of a scary market with the geopolitical concerns and the rising inflation. So there's been a few things that have caused people to worry. And, you know, we've had such a long bull market ever since the COVID crash in February of March. You know, it was certainly helped along by the central bank's quantitative easing. But the blueprint for investing was pretty simple. Just follow the trends, you know, the technology, the biotech, the stay-at-home economy stocks, hold some blue chip household names. And it's been pretty easy, and it really hasn't been that easy in 2022. So we have to really sharpen our saw a little bit and make sure we're on track in terms of how we analyze our stocks, how we analyze the industry groups, and how we analyze the market trends. So that's where we want to talk about here. Rob says, get a little closer to the mic. Okay. How's that, Rob? Let me know. And Lauren says the same. So I just moved it up about 12 inches here. So I think we should be good. Volume still down? Okay. I'm not going to shout, but I will speak up. Sorry about that. All right. So again, it really hasn't been that easy in 2022, but certain sectors, certain industry groups, you know, like petroleum and chemicals have really been soaring. And so with the industry viewer, we are alerted to those opportunities. And so I know Richard asked me what kinds of stocks I'm in. Well, petroleum, fertilizer, NPK is my holding right now. I was in NTR, you know, on the chemical fertilizers. Meanwhile, semiconductors on the US side and software really started to get pounded. So we really need to watch those industries. So the most important takeaway from today is You want to stay in the market, be an optimist like Dr. Paul. You want to make sure that you have your rules, but once you have that in place, the stock market is the best place to grow your wealth. We're just going to have to be a bit more patient, a bit more selective, and most important, we have to avoid big mistakes that can destroy a portfolio. And that often happens when we don't have rules, or if we don't follow the rules. So that's a concern. Yeah, Chad, thank you. He says there's a volume button on your computer and YouTube. It's right at the bottom of your slide. So turn it all the way up if you're having trouble hearing, because I do have a bit of a soft voice sometimes. I will acknowledge that. All right. Well, listen, why are investors so nervous? There's a few things happening that we need at least to be aware of. I mean, we want to follow VectorVest guidance, and we are in a confirmed up call everywhere but Europe. So we want to follow the guidance, but there's a few things we need to be aware of. We've seen a brutal tech sell-off, the NASDAQ collapsing almost 20%, coming back a bit now. The S&P and the Dow suffered almost 10% corrections for the first time since 2018. Kathy Wood, I think most of us know about Kathy Wood through Ed Subak's thematic investing lessons to the forum a while back. And the ARK Innovation ETF actually fell more than 40%. So that makes investors nervous. There are lingering effects of the pandemic leading to product supply constraints. That's a concern. Inflation is soaring. I think we're all aware of that. Everything costs more. And so to fight inflation, the Fed and the central banks are certain to raise interest rates again and again. And when they do that, rising inflation and rising interest rates, those are the enemies of the stock market. Dr. Toledo describes them that way. And the Ukraine-Russia war is not only a human tragedy. I know we're just all so emotionally distraught over what's going on there, but the global financial consequences and the impact on the food supply worldwide is really frightening and scary to investors as well. And long term, the bond yield curve is sort of waveringly inverted. And so there's more fear and discussion about a possible recession, not in the short term, but down the road, possibly. Yeah, Lauren says, interestingly, lumber has fallen back. Is it in buying mode? And we can take a look at that. I want to ask you a bit later what industries you might like us to look at, or what stocks, and then we'll look at the industries. So I'm first going to start off with just some tips from the VectorVest instructors and from our founder, Dr. Mark Toledo. So follow VectorVest market timing and color guard guidance. Find the best and worst stocks with VectorVest VST, value safety timing ratings, the comfort index, the buy, sell, hold recommendations, and other indicators. And stay away from stocks that don't have good fundamentals and are also not rising with that RT to give it a good value safety timing mention. Invest in top stocks in the highest RT ranked sectors and industry groups, and avoid stocks in falling industry groups. That's that big mistake that you can make. And I'm going to show you a graph of semiconductors in the US side that will just kind of really hit that point quite strongly. Be selective. Use VectorVest buy sell ratings, the RT, and the Midas touch setup to anticipate future price direction. I've talked on this forum about sort of a variation of the Midas touch and the EMA squeeze that I've taught previously, and that can be very helpful. I call it the near perfect indicator. I've done a video on it on VectorVest YouTube because it really identifies for us the true direction of price trend. And buy when the RT40 moving average is rising from a valley or a bottom, and consider selling when the RT40 MA is near a top and your stock is losing momentum. So I'm going to go into some graphs and show you that very clearly. But just before I do that, write out your rules for entries and exits. You know, Dr. Paul referred to that. You know, if you follow your rules and they're written down, and the trade goes against you and you have to take an early exit, it's still a good trade. You followed your rules and it's still a good trade. How many here are getting better at following their rules, because all the instructors in VectorVest really hammer that point home? Dr. Paul certainly, and others as well. Just give me a 7. Chat in a 7 if you follow your rules. Michael V says, yes, that video on the near perfect indicator was great. I'm seeing lots of yeses. Just type in a yes or a Y. You know, are you following the rules? That's really important right now. We're not holding it against you if you don't. See the 7s coming in. Yep. Looks like lots of folks are following the rules and wrote them out. That's pretty effective. All right, so play small ball and defense first, and I've got an essay that kind of described that, so I'm just going to go to that in a couple of minutes, but it'll help you avoid the landmines that destroy portfolios. So if you're sitting on the sidelines and you're not as optimistic as Dr. David wants us to be, maybe start nibbling into stocks. And by that, I mean open up 1 or 2 positions, and just smaller positions. You know, that'll keep you in the game and take advantage of some up moves, but you can be out very quickly if things go against you. Yeah, and Chad says the Successful Investors course and the Mastering Moving Average course really helped me. So that was all about rules and trend following for sure. Yep. Yeah. So lots of great comments coming in there. All right. So Dr. Toledo's timeless tips, just quickly. Never risk more than 1% of your capital on a single trade. So for example, if you have a $100,000 account and 10 positions is your goal, the most you should lose on any one position is $1,000. So 1% of the capital at risk on any single trade. So that's a really important rule. Aim to hold between 5 and 12 stocks with a maximum of 20 when constructing a medium to long-term portfolio. Look for that diversification. Limit yourself to 2 or 3 per industry group. Add selected ETFs. I covered that in an essay a couple of weeks ago. Really important. Yeah, and Dave says lots of wisdom there on the 1% rule. And, you know, I know for longer term subscribers, this is a lot of repetition, but I think in this market condition where everybody's nervous, I mean, look, I'm nervous. I'm nervous about what's going on in the Ukraine. I'm nervous about inflation, interest rates rising. We're nervous. We see that our indicators are telling us it's okay to buy, but we're nervous. So we got to be reminded of these basic rules. Buy the top VST stocks in rising sectors and rising industry groups. Going to cover that a bit more. So important. Sell or short falling stocks in falling sectors and industry groups. You can do put options on stocks that you hold, or even if you just want to hedge, even if you don't own the stock. Very, very important. Just going to grab a glass of water. Chris says volume getting weaker. I guess I'm talking fast. All right. Set a protective stop loss before you place your trade, or at least at the same time as you place that order entry. Make sure you've got your stop loss in place. If you're using the VectorVest Portfolio Manager, you can set up an alert to let you know when your stop has been hit. You can put your stocks in a watch list and just have a look at them every day, see where the moving averages are, and that'll work out really well. Oh, John, thank you for that. And John says, read and reread Stocks, Strategies, and Common Sense by Dr. Toledo. So important. And of course, we have the new 3rd edition in the welcome section of your graph now as well. So just right up here at the top, you click on the welcome tab and you can download Dr. Toledo's classic green investment book, and it's just a gold mine of wisdom and information. Thank you for that. And do not make hasty or emotional decisions. You know, some of my worst exits have been when I panicked, and I just kind of refuse to do that anymore. I'll wait till the end of the day and make a decision once I've had a chance to analyze everything and see where my stop is. But sometimes a stock gaps down and you make a hasty decision, and sure enough, by the end of the day, the stock has come back. Or you buy a stock. How many of you have done this? You see a stock is gapping up, and maybe it's even on good news, and you buy in sort of while the stock is rising on the day, and by the end of the day, you're either flat or losing money. Has that ever happened to anybody? Just a Y or an N? Just give me a Y if that's happened to you. Yeah. Tim says, easy to say, hard to follow. Craig, I'll show you how to find the RT ranking for sure. Going to do that in a minute. James says, do I use the profit locker? I have different techniques, and I don't use the profit locker personally, but I know it's a very effective tool for sure. Lots of Y's coming in, so it's happened to people. Don't make hasty or emotional decisions either on the sell side or the buy side, and use tighter stops to lock in profits early and trail your remaining shares higher. That's exactly what Dr. Paul described to everyone in his presentation today. As soon as you can make enough money to sell half your position to get back to even, and then you let your winners run from there, is a great risk management technique. Yeah. Marguerite says, I do like the volatile stocks. Nothing wrong with that. Volatility can be great, especially with options. But you got to make sure you're in the right direction and ready to make decisions if your stop loss is triggered. And never give back more than 1/2 of any sensible gain, I think, is really important as well. All right, so I wanted to cover all those kind of basic tips from Dr. Toledo. Oh, and he also, and it's in the green book as well, never average down. You know, never decide, well, yeah, I'm down 10%, but it's a great stock, so it's cheaper now, so I'm going to buy some more and get, you know, closer to break even. That just rarely works out in your favor. Okay. And Rob says, I use the never give back more than half rule. And for me, if I've got an 8% or a higher gain, I just don't like taking a loss on that. And so if it starts to move away and I can still get my 3 or 4%, I'll take it unless I see that the RT 40 moving average is still rising and the 40 moving average of price is rising. I'll make sure I at least capture that much. 8% might be a little tight for some, but that's what I look at. Yeah, so Barry says, one big reason why we should be cautious is that the RT in the US software has not been above 1 for about 4 months, showing no positive momentum to the upside. That's awesome. And Bill says, I hate gaps and do not trade them. By the way, I wanted to comment, the chat in the chat box has been just exceptional again today. Really appreciate all the great insights and comments that you are all chatting in and sharing your strategies as well. Very, very nice. So listen, a couple of essays. I wrote this one, and I did talk about this at the last monthly international online forum. Maybe it's more prescient even today, and that is stay safe and prosper in an uncertain market. Don't get caught in the trap of paralysis by analysis. If the market is moving up and we get green lights and the DEW is up and the confirm call is up, at least step into some positions. You don't have to go all in. In fact, in this market, you might want to hold, between 10 and 15, 20% in cash for the exceptional opportunities. But you got to be willing to step in and willing to step out if the market is starting to tank on you. So just remember, you can always adjust your stop loss higher, just never adjust it lower. And now is a good time to revisit the Weed Your Portfolio method explained in lesson 2 of the Successful Investing Quick Start course on the training tab. Only buy when the market is rising. I know this can be tricky right now because I've had it happen to me where my stock is looking good, the futures are up. I'll wait the 30 minutes, and in the afternoon, the market tanks. So it does happen, and so you really should watch those color guard signals, okay? All right. Lots of great guidance in the chat box for folks as well. So I mentioned I'm in NPK, a chemical fertilizer here in Canada. It's been kind of pulling back. I've given up some of my gains here a little bit, but it was the #1 ranked industry in Canada and still is. And at that time in March, there were 8 petroleum industry groups in the top 10. So if you weren't in petroleum, you weren't looking at the industry viewer or the sector viewer or even the stock viewer, because at one point there were 19 out of 20 top VST stocks that were petroleum stocks. So we have to jump on to those trends. And be patient, only buy the best stocks with the best setups. And I'll show you the setup I really like, and it's the Guppy EMA Squeeze that I'm going to talk about next week in the Mastering Moving Average webcast that Jerry and I are doing. But when the 5 moving average of RT is crossing the 40 moving average of RT, and when we get a buy recommendation, that's a strong indicator of rising prices. And when I say play small ball, that means fewer positions than you would normally do in a robust market or a less uncertain market. Buy fewer shares and set your initial stop tighter and then stick to it. All right. I wrote about creating a balanced portfolio using ETFs. You can add diversification with 1 or 2 or more ETFs. So you can go to VectorVest Canada and read about some of the ETFs that I like. We can also track the S&P 500 with an ETF in Canada and the NASDAQ. And of course, you've got terrific ETFs in the US side as well. Oh, Tom, you beat me to it. Tom just says, took half profit on NPK yesterday. Oh, half your profit. Awesome. Okay, you didn't sell everything. Yeah, I still believe that chemical fertilizers are going to be incredibly important after what's gone on in the Ukraine especially, but even in Canada. It's been a very dry winter, and it's going to be a tough go, I think. All right, and then just yesterday I wrote about the industry group and business sector RT analysis. Despite unrelenting inflation, geopolitical concerns, this market is giving investors opportunities and gains in focused areas. And if you want to improve your stock picking results and get better at knowing when to sell, you must start using the industry group and business sector RT analysis in VectorVest. And I love the comment somebody chatted in that Dr. Paul is very strong on that as well. All right. So I talked here about 122 industry groups in Canada. Steel crossed below 20, so that's good. If 1 is the best when you're talking about RT ranking. So when it crossed below 20, it was outperforming at least 102 other industry groups in Canada. So on March 1st, steel got an RT ranking score of 16, improving from 35 the day before. There's actually only 3 steel stocks in the database. All 3 had nice gains, and Stelco has been the top performer, up 24%, just from that point where the RT ranking crossed below 20 and into the top 20. And then I show again petroleum drilling. It's second or third ranked in both Canada and the US. And some of those stocks, CES gained 16%, Phoenix Energy 38%, and Precision Drilling 72%. The average of those companies in petroleum drilling in Canada was 43%. So something to pay attention to. And I've asked people to just do themselves a little quiz to increase awareness, and maybe you could just chat in right now if you have a great understanding of where your stocks are in terms of the industry RT. How many are in the top 20 RT ranking of the industry groups? That's a great exercise for you. Lawrence says, I just bought more Stelco. Awesome. And Doug says, I bailed on Tourmaline, more of a natural gas play, way too early. Yeah. Awesome. Everybody says all good. Okay. So follow the daily guidance in the color guard. Don't buy when the needle is in the red, obviously. And just read the message. It's right front and center on your home page. Market timing, you have different signals. Listen, you can use one signal for entering a position or a market. For example, if you want to be a bit more aggressive on the entry, especially after a long downturn, you can come in on a primary wave up or a green light, and then you can exit again on a confirmed down call just to protect yourself going forward. This is the Canadian market, and our confirmed calls have been really spectacular the last few years in terms of the guidance. And overbought, you want to be defensive. Oversold, you want to be aggressive. And the way we identify that in VectorVest is when the MTI is near or below 0.60, that as it was sort of down here on January 27th. We got a little bit of a blast off. It didn't last very long, unfortunately, but it's still going. And then on the overbought, when the MTI in both Canada and the US, if we get up around 1.5, we're into that overbought. In fact, in Canada and the other countries, if we get up around 1.3 on the MTI, we're heading into that overbought territory. But you can kind of see what often happens when we do get into that overbought. The market tends to pull back, not always for as long as this, but keep in mind this was following a very long bull market. All right. So the stock viewer, gold mine of information. It's should be front and center for you. Industry groups are key, and buy the best stocks in the best performing industry groups. I move my RT ranking indicator over to the left here so I can see steel is the top ranked industry currently in the US. It's the 4th ranked industry group in Canada. Let's see, is it anywhere else? So you can see the industry groups quite easily. And here's a little tip. Studies have shown that between 50% and some say even as high as 65% of a stock's performance can be attributed to its industry. So that is really huge. It just means that choosing the right industry is really about half the battle when you're trying to make money with stocks, and for knowing what not to buy. I think that's really important as well. So there's a lot of sectors and industry groups to keep track of, but in VectorVest, we make it easy. I'll just go to the US here for a quick minute. I can click on the Viewers tab. And for example, I'll go to the Industry Viewer. We have 222 industries in the US, and we can rank them from 1 to 222. Okay. You're going to get the copy of the slides, Bill. No worries. The VectorVest will be sending them the slides out on Monday. Okay. All right. So there's the industry groups for the US. And of course, the broader business group is the sector viewer. There's steel, petroleum. And for example, steel, you can right click on steel and you can view the stocks in the business sector, view the industries in the business sector, whichever way you want to go. We've got alloy and basic. So I'm going to show you this right now. If I right click on alloy, which is the #1 ranked industry group, I can view the sector graph. And it moved it up to another monitor. So I've got the Guppy EMA Squeeze layout on here. It doesn't matter which one you have. But what I want you to notice is down here at the bottom, horizontal line here. So here, for example, is the RT ranking of 30. And the way you add RT ranking to industries and sectors is go to add parameter and just left click on it. And under capital appreciation, you'll see RT ranking right at the bottom of the list, only for sectors and industry groups on the graph. And then you can come down, it'll drop it down to the bottom, and you can just click on it and open it up. I think I moved it up to the top, somewhere in there. There's RT ranking. So it's currently #1, but let's just see what would have happened here if you had noticed the RT ranking was starting to come off of the bottom, and maybe you didn't get in right away, but here you've got a bottom in the steel industry group, and it's starting to rise. So you could come in at any time here and start to look at positions. That's February 7th. So let's just have a look. So we'll just do a quick test. Oops, we've got to do stocks in the industry group. Not that many in the alloy, but we'll just move it back to February 7th and do a quick test. And I think you'll see, hopefully, the efficacy of the power of the industry group. So from here, you can do a quick test to current, and you've got some really nice gains at a time when the Qs was down over 10%. PVC probably not down quite as much, down 6.29%. All right, so that's how you would use that. And before you buy a stock, you should check to see the strength or weakness of the industry group, is what I'm explaining. And if I go forward, here's chemical fertilizers. Notice the RT ranking. This is in the US. RT ranking on February 9th got above 50. It's 35 on that day. Price is above the 40-day moving average of price here. And if I did a quick test, which I did here on the right from that day to March 15th, when things kind of started to go down a little bit, you had some really nice gains there as well. Irv K says, how do you consider the low relative safety values of the stocks in the steel alloy? It might be a consideration, depending on your investment style. If you're more aggressive, then you're really concerned about the relative value indicator. You need a strong RV score, and of course you want the RT rising. Relative timing, when you're taking advantage of a strong industry and a stock that's really rising fast in that industry, RT is really one of the key indicators. All right, so that's the efficacy of that. Here's how it looked in the US side. RT ranking of 4 right here. And this is that EMA Squeeze layout with a 40 moving average of price. And that was a great entry on February 16th. And NTR, I was in that until it started to weaken a little bit. And I switched over to NPK. And it is pulling back from where it was, but still up pretty nicely from there. Yeah, Phil says NPK support at 705. Wait for a spring or bounce off of that support. Yeah, awesome. All right, a couple more slides and then I'll turn it over to you if you have a stock or an industry group that you want to look at. So here is the EMA Squeeze layout with the electronic semiconductor manufacturing. And if you've been wondering why NVIDIA, one of VectorVest's favorite stocks and investors' favorite stocks has been falling, well, it could have something to do with the industry group that's falling. Notice down below, the industry group was above 50 on the RT ranking all this time, and then it fell below 50 on 1/5/22, and we saw the 40 moving average of RT peaking up here. So it's no longer rising. It's kind of sideways to falling. So it was a great time to exit the position. But unfortunately, NVIDIA down 22%, AMD down 24%, and MU down 26%. So at this point, where the RT ranking was below 50, there were 50 other industry groups that were performing better than the electronic semiconductor group. So if you chose that time to buy into semiconductors, even a popular semiconductor like NVIDIA or AMD, you kind of got your hat handed to you as the whole group continued to fall. Does that make sense? Yeah, and Richard says they all will be back and semis are the future. I have no doubt they will be back, and just look right here. We can see that they've started to come back already. Will they keep going? That's the question. All right. So here's healthcare marijuana stocks in Canada. Just, the the floor just fell on these guys. And again, checking with the healthcare marijuana industry group would save you from that pain. Now in Canada and the other countries, I tend to look at RT ranking in that 20 to 40 range. I like the RT to be rising and above 40 because we only have 122 industry groups in Canada. And if it's above 20, even better. Okay. All right. Any stock that you want to look at, we'll check the industry group to see when maybe the industry group was rising. It's going to be a good stock or a stock that you're struggling with, what to do. Daniel, I think that's a compliment. Very quiet Barry White of the stocks. My voice must be getting a little froggy. Okay, I got to make a note of these. John says BGFV. BGFV. Okay, sorry, I didn't move as quick as I should have here. Michael Yu says the NTR stock. Steve, we're not doing futures, but you can find in the agricultural area some corn and wheat maybe from there. John, just some basics, MSFT and Apple. Okay. I'm just going to show a couple of these. Sorry I didn't get them all. SQ. We can take a look at some of these. All right. So I'll go to the US side here. I'll just look up in the stock viewer. So I can just start typing in some of these symbols. I think a lot of these came in. Nutrien trades both in Canada and the US. MSFT now trades in Canada as a CDR, Canadian Depository Receipt, but we'll take a look at it here in the US, and Apple the same. And Square, TQQQ, we can have a look at that. It did trigger to the upside in both the BS strategy and Don Rietman's strategy from the previous month. So a little bit of an up signal there. Okay. All right, listen, I won't get through them all, but I'll do my best here. So Nutrien comes to the top. So the first thing I'm going to do is just have a look at the industry graph. So it's in the chemical fertilizers, as we saw before. This is that Guppy EMA Squeeze that I know a lot of our subscribers are using because it just works so well. I can look at it without the price. So for Nutrien, on the US side, this was a great entry opportunity, or you could wait for the 5 moving average of RT to cross above the 40 moving average of RT, and the RT 40 was starting to rise quite nicely. I've got my RT ranking of 50 right here, so it was nicely above 50 on that day, and it moved all the way to the top 5 here. So February 11th was a great time to buy into Nutrien. So I'll just close out of that. Just going to do a real quick test on February 11th. So quick test is just a gain or loss from point A to point B in VectorVest. We can use the quick test function. So Nutrien was up 36%, and the industry was rising. Now, I'm not sure in the US how many industries are in that group. Not that many in Canada, just a handful. So let's just have a look. So we'll view stocks in the industry group. So there's 11, and most of them are quite robust. Marone maybe a little bit lower. All right, so then you can look at the graph. When would you have bought Nutrien? So February 11th, the whole group was moving up. And wouldn't you know, Nutrien, you might have got into a little bit earlier, but what a great entry. Everybody see that? Does everybody get sort of the process? Yep, the RT ranking, Irwin is correct, only shows up for industry groups and sectors. So here I'm in Nutrien. I'm not going to be able to see the RT ranking of the industry or the sector, but I just showed you how you get it, and then you can go in from there. So what a great entry. What a great entry. Everything rising, beautiful. Did pull back here a little bit. You know, that's the only issue on the US side. All right, so let's look at Apple. So it's in the computer makers, and we can see the RT in computer makers is at 0.96, so maybe not that strong right now. Let's have a right click, and initially we'll look at the industry graph. So there's the computer makers, hopefully in a minute. There we go. Oh my gosh. Pretty darn choppy, right? Pretty choppy, but let's just see. I'll put on the horizontal line on the RT ranking, and that's at 100. That's at 50, right about there. So there might have been an opportunity to buy Apple back here on 12/02/21, so December 2nd of 2021. But then you had to be pretty nimble and take your profits on this lower high on 1/2/22. Okay. So at this time, you would have been looking at this and saying, you know, all these last couple of months or 3 months, how many would have thought Apple would have been a good buy during this period? Anybody? Why or no? How many would have thought to themselves, well, I don't own Apple, but I've always wanted to own Apple, and it's priced right now, so I'm going to start to buy in right here on January 12th. Anybody? Yeah, for RT ranking, I don't really recommend a moving average on it. It's you know, it's based off of the RT, of course. Basically, you're getting it with the 5 and 40 moving average of RT. All right, so let's have a look at this to 112. Let's see if Apple made any money from December 2nd to 112. That would have possibly been a buying opportunity. So we'll do that same quick test, and then we'll look at the graph. There's our quick test. I'm going to run it back to December 12th. There's December 2nd, I should say. And it started to peter out on January 2nd. As far as the industry group. Oh, I didn't get that right either. Maybe it was January 27th. I can't recall. Let's put in January 7th. We'll see where that goes. So Apple at that time gained a quick 5% just in a very short time. Let me just quickly double check the graph. Oh, January 12th. Okay. So we had a little more room to run. There's January 12th, run the test. So you gained about 7%, and then you knew, you know, the industry group was starting to falter. So on January 12th, you just say, you know what, we hit a lower high here. Things are starting to roll over. My 5 moving average of RT is peaking, and you're thinking about taking your profit and running. Yeah, Heidi's asking, so when you're thinking about selling a stock, do you consider the industry graph? Heidi, I think it's a really strong idea, and maybe especially in this uncertain market, when you see an industry falling like this, you might have a stock in the computer makers that's still going higher, but when the whole industry is falling, you should at least tighten your stop on that stock. Follow the guide of the industry groups. I think in this market, if I'm getting a message through, I hope it's that industry groups and sectors are going to be where it's at, and that you'll see the opportunities from those strong industry groups, and you'll see the weaknesses and the danger, the landmines from the industry groups that have peaked and are starting to fall. I think that's the message that I hope I'm delivering. So let's just have a look. So we can have a look at the graph on Apple and just see kind of what it was doing. So there's the stock graph. Okay, so January 12th was right about here. So not surprisingly, Apple, because of its large market cap, it kind of leads the computer makers, and it was pulling them down right at the same time as the industry group was falling. But look at this, you could have got in maybe a little bit earlier based on this graph layout, maybe right about there, November 19th. And you got a buy rating from VectorVest. So you would check the industry group, and if it's not falling at that time, that was on November 19th, Maybe there was an opportunity there. Let's have a look. Or Apple could have been the outlier as well. So November 19th. So on November 19th, the computer makers had just bottomed and were starting to turn the corner to the upside. So if you're a little bit more aggressive and you see, especially down below, you'll notice that the RT ranking was in a wedge, giving you a pretty nice buy signal right there. So yeah, you could have gotten into Apple earlier. All right. Just going to add one more here. Folks, is this exercise of value? Do you find this useful that you can put to work? Can't read my own writing. Here's Prologis. So it's in the REIT equity. Notice at the bottom. Yep, some folks are saying, yep, this is helpful. Yep. Barry says makes absolute sense to buy rising stocks in rising markets and rising industry groups. So people are finding this useful. So I'm not cherry picking any of these stocks. Hopefully we'll get one where we see that, yeah, we shouldn't be in that stock. We'll find out. Here's Prologis, so we'll take a look at that. Here's the industry graph. That's a starting point if we're thinking about buying the stock, or maybe we own it and we're thinking maybe it's time to sell. I think it's a REIT, so we're probably thinking about buying. So this is an interesting one from Gord, and I think it was from Gord, and we notice that the RT ranking is finding support here at the 80, so it's outperforming 140 stocks, I guess, or 140 industry groups, so it's better than most, and it is starting to rise. There is overhead resistance. It's had a hard time getting into the top 50 and certainly into the top 20, but it is rising. And if we look at put on the date line here, the EMA Guppy Squeeze showed a little bit of a sell signal right about here. So that was on March 28th. The industry was at the support level. I would have been hard pressed in these conditions with all the concerns, the geopolitical concerns and everything else, unless the stock was really taken off. I wouldn't have had a lot of confidence in the industry group until about March 28th or 29th. So let's just have a look. In fact, what we can do, if I go back here, I can just come into the industry group over here at the left, click on the performance graph, and then I'll just add PLD. So PLD is definitely performing much better than the industry. So that's interesting. This is PLD, and it kind of started to go from the bottom here. And it really took off right about there again. So yeah, not too bad. Yeah, Lawrence, you're right. NPK fundamentals do not look that great. It really is a play on the fertilizer situation and a rising industry group, although that is turning over in Canada as well. So watching it close. Let's have a look here. Let's look at Square. So we'll take a look at Square, and we'll start with the industry graph. So Square got kind of beaten up for a long time, and I believe it started to come back here a little bit. Let's have a look. This is the software financial. Kevin, you can definitely create searches if you have the Pro Trader, you can definitely create searches to help you out with this. So this is a great example. So somebody gave me this, I'm sure, because they knew the difficult time that this industry group was having and the stock is having as well. So, way up there, let's put on the horizontal line. And the best I can find here is 124. So it's never cracked the top 100 in the last year as far as industry groups. So if we follow sort of VectorVest guidance of buying rising stocks and rising industry groups, we might have a rising stock, but we just don't have a rising industry group. By definition, the RT is still very weak. Now we are seeing a little valley here with the 40 moving average of RT, and the 5 moving average is rising, but you really got to be careful until it gets above this entry here. Let's just add square right on this graph here. So square started to make a move back here, but again, whoops, based on the industry performance, even though the MACD is starting to build strength, based on the industry performance, well, you got a buy rating from VectorVest. You just want to be careful. It could be one of the few stocks that's starting to move up. Interesting choice. Let me do this. You're looking at the chart. We saw the financial software industry group. Give me a 5 if you would go ahead and buy Square right now if the market opens higher Monday, and give me a 1 if no way would you buy Square until you see more strength in the industry. Anybody? 5 or 1? I guess you could go in between as well if you're undecided, but there should be pretty strong opinions about this. Either yes, I want to buy it because you got a buy rating and you like the Guppy EMA Squeeze moving up, and you're going to ignore the industry group. How many are in that category? So there's a few 5s and now a lot of 1s coming in. I think it's great. It just kind of challenges us to think about the industry group and how that affects our decision. And a lot of 5s coming in, so people would go ahead and buy. And if I put the price on Square, and I just so that was kind of an upward wedge. So there is some benefit here, but notice 3 down days and a bit of resistance right here. So I'd be in the camp where there's better choices out there. Tom says 5 with a volume spike. So you could certainly look at the volume. There it is there. And it doesn't really have big volume spikes with it as well. Yeah, Patrick says there's better opportunity in other industry groups. So let's just go back, and we're in the U.S. The industry groups, we don't have as many in Canada and Australia and UK and Europe, but we certainly can use the industry group viewer the same way. But let's just stay in the US and go back to the industry viewer. And let me ask you this. Let's just show the top 10. By typing in a number from 1 to 10 here, or 1 to 11 I've got, which industry group would you like me to look at? Just type in. I think we've looked at steel. Any others that we haven't looked at that we should look at? This will be our last exercise for the day, I think. Anybody? Otherwise, I got to look at 1 because I got 2 people said just go with 1. Robert says 2, petroleum drilling. Yeah, petroleum drilling is the second best performing industry in Canada as well. Somebody said miners, so number 5, we could go there. Okay. The miners aren't here, are they? Don't see any. I'm going to go with number 2. Oh, aerospace could be a good one too. We'll see. Quite a few people chatting in, and transportation ship people are chatting in. All right, let's start with drilling. Let's first look at the industry graph. Pick our date when we might have considered going in, and would we go in today? Sorry, I can see my internet is starting to slow down here. Well, petroleum drilling, again, it's been a top performer in Canada as well, and this is looking really good. Not only that, from an industry group perspective, this was a pretty easy decision. It crossed above 40 way back here, and the 5 moving average of RT crossed above the 40 moving average of RT. The EMA squeeze, the 5, 8, and 13 EMAs are fanning out, and the long-term investors are squeezing. Everything was looking good on January 7th for petroleum drilling, and it still looks good today, wouldn't you say? I mean, it's number 2 in the industry group, and the lines are running parallel toward 2 o'clock. Okay, so what did I say? I said around January 11th, somewhere in there, January 10th. Let's have a look. So let's look at the stocks in the industry group. I just did a right click on petroleum drilling. I immediately open up to the stocks. And there's 15 in the industry group. So not that many. I'll just go to January 11th. Whoops, there we go. And we'll do our quick test from there. So we're just starting with the top VST stocks are at the top of the list. I guess I better go to the current date. Didn't get off to a great start there, did we? So a lot of double-digit gains. Top VST stocks, the 2 of them are up over 50%. And on it goes. RIG, a lot of people are familiar with RIG, up 30%. So not too shabby. All right, one more. Listen, I could do this all day. I hope you're enjoying it as well. But I love it when you give me these ideas. So there were quite a few 5s came in. So I'll just look at transportation ship and then we'll quit. So I'm going to just view the industry graph on transportation ship. It's a 5th ranked industry group at the moment. So we want to see, when did that industry group start to rise? When would have been a good opportunity to come in and start buying some stocks here? So it cracked the top 100 back here and got above the top 50 right about there. So that was on February 4th, would have been a great opportunity to look at some stocks. Okay, February 4th. And I'll just do that quick test again. Oops, can't do that. I'll just right click and go to the stocks in the industry group again. It's quite a lot of them in the transportation ship. 51 in transportation ship, ZIM right up at the top with its big dividend. And let's quick test the top 10. That was okay. And I said February 11th. So I just have to change the start date. Run the test. So ZIM is our worst performer, and a lot of that was just lately, right? But other ones still running pretty strongly. And with ZIM, there could be concerns about this 27% dividend. I'm not sure. I mean, Golden Ocean also has 19% dividend yield. There could be something there. All right. Well, thank you for your participation, everybody. You know, we're still having our trial offer at 99 cents. So if you're new to VectorVest and you like what you see with industries, I think is a great way to manage your portfolios, both on the entries and the exits. So hopefully we really drilled that in today and how to do that. And you just go to vectorvest.ca or vectorvest.com, click on the risk-free trial and join us for that. And don't forget about our moving average webinars next week, Wednesday and Thursday. Just go to the views and register. And if you need help, call 1-888-658-7638. Hopefully this was great for you. If you would click on that like button if you like this content, we would appreciate it. I think that just helps us grow the VectorVest nation, as they like to say at VectorVest. So that would be great. And there's the international numbers. And if for some reason on Monday you don't get the slides, just drop me a quick note at stan.heller at vectorvest.ca and I'll be glad to help you out. Thank you so much, Margaret. That's a very kind comment. Best software and best support instructors. Very much appreciated. Thank you, Robert. Barry, thank you, and everyone. Much appreciated. Thank you, Irv. All right. Well, listen, thanks, everyone. Have a great rest of your day. We've gone a little bit over our allotted time, but I think a lot to cover here, and hopefully of strong value in this really uncertain market. All right. So take care, everybody. Wish you all the best.